Okay, recording this video after close of trade Tuesday, 6th of September 2011. I'll try and make this video short. Actually getting on a plane in 24 hours for another of our trips, and so rushing around madly with the kind of last minute arrangements. And I'm missing, one of these kind of epic weeks where, there's huge volatility in the market. My headspace just isn't in it to trade at the moment, just because we're kind of doing all the admin things to go traveling. So we had Labor Day Monday. We kind of ended up gapping down the open on Tuesday. Gap down was like 35 points or something like that. Then we bottomed immediately at the beginning of the day and started rallying all the way back to kind of close this gap. 2.5 million contracts traded. Now, question is that it? I suspect not. 40,500 tip bar chart, the highest tip frame chart that I look at, and we was talking about last week. We had cyclical turn on the daily time frames coming up on the Wednesday. We had this end of trend perfect little signal at the top on Thursday. You could see all of the bearish divergence signals. We'd had our exhaustion buying, less and less buying going on, bearish divergence right here, bang, we sell off, and we sold off into Rambo patterns, and we come back to form a pullback and a downtrend level. I know we've kind of punched through there a little bit in the after hours, but still think this is pretty significant. Got a whole bunch of blue professional bars at the end of the day on this time frame. We had that on all the time frames. Huge amount of professional activity at the end of the day. Question is, were they kind of taking profits, after having this opportunity to buy into the gap down, kind of forcing the market up, buying at the lows, forcing the market up, and then getting out at the end of the day ready for another crack down. Now, we've not had exhaustion buying on the downside. This reading was pretty extreme, kind of minus 60,000 odd on this time frame, and it kind of mirrors the readings that we were getting prior at the previous high, but it hasn't. I mean, we've not had an exhaustion selling signal kind of go off here. So exhaustion down moves do tend to end more dramatically with more kind of flush out selling and so on. So I have a feeling we're going to kind of crack down. Then the question is, if we get that exhaustion selling signal on the end of trend warning signal, if we kind of continue on down, are we going to have to wait for a second cyclical turn after end of trend for this whole move to bottom? So there's still a chance that we've not seen that exhaustion selling on the downside. You can see on the 13,500 tip bar chart, and I talk about end of trend warning signals kind of rippling through the time frames. You go one time frame down and you can see the end of trend at the beginning of today's activity, beautifully marked after Friday's exhaustion selling, all these bullish divergence patterns and so on. And so in effect what that is doing is marking the left shoulder of this move down. So that comes in at the beginning of the day here. So left shoulder of this move, then we kind of come back to form end of trend, which will be the head of this inverted head and shoulders move, and then a right shoulder at some point. So that was signaled the low for the day. A lot of blue professional bars kind of buying into that, buying the bottoms, if you like. We came back to test, second cyclical turn, blue professional bar kind of coming in at lows, and we kind of raced off. Now here at the end of the day, these are all the blue professional bars that we had a whole series of them coming into 1160 and then into almost 1170 at the end of the day. Whole series of them here, and we've had this interesting looking pattern where we kind of sell off. For me, I call this kind of a last roll of the dice type pattern, where the professionals use this opportunity to get short, and you see a huge amount of selling activity here, and then we float back, the professionals kind of taking all the opportunity as we float back up to kind of get short here. We'll know tomorrow, if we kind of top out, break this resistance line here at about 1150, 1155. If we start kind of heading back down, looks like we're going to be plumbing the lows, and let's see how close we get to 1100. On the 4500 tip bar chart, you can see that kind of gunning the market at the beginning of the day after the open. All these blue professional bars, we kind of kept on going. Then we had, I think it was the non-manufacturing ISM numbers kind of came out. Exhaustion buying kind of came all the way down with exhaustion selling. Bullish divergence right down at the bottoms. Rambo pattern right down here, and then we kind of went off to the end of the day. And again, you can see, look at all this activity, all these blue professional bars at the end of the day after exhaustion buying. It's an end of trend warning signal on this time frame. So and again, it's end of trend on the lower time frames coinciding with a cyclical turn on the higher time frame here. So tomorrow, Wednesday, is going to be kind of pretty important. Just a note on kind of dollar index and some other charts. We had a real, I mean, obviously, everybody's kind of seen the charts on the Swiss franc, but dollar index kind of jumped up big time today, up to 76. Now, for me, the question is this with kind of professional buying, huge range bar here, jumping the creek, and the creek being this kind of consolidation area that we've been in between 73 to 77 on dollar index, and that's the move that kind of gets us going, and then we kind of break through 77 and never look back type thing. Just in the background, I've always said that we've got these are pointing the wrong way. The exhaustion buying and the flush signals are pointing the wrong way. They should be the other way around in order for us to have really kind of bottomed out here. So is this another of these kind of professional spike ups where the professional uses an opportunity to kind of fool people and then kind of are getting short, and we kind of see new lows on dollar index? Potentially not. Potentially this is it, and we're kind of moving the other way. If I show you it on the euro chart again, we kind of spiked down. It was hugely volatile up and down just because of that Swiss franc move during the Monday-Tuesday session in Europe. And again, we're at, is this falling through the ice, which is, this consolidation pattern, and this is the professionals' kind of last opportunity to get on board as this kind of breaks through 140 on the downside. Here the pattern's a little bit kind of clearer, where we had exhaustion buying here and weakening buying at the top of these ranges, but we've still been caught each time we come into these lows with blue professional bars. So let's wait and see over the next couple of days whether we really kind of continue on strongly down here in the euro. If we look at gold and silver, they would suggest that maybe the move into dollar is genuine. So gold and silver being kind of anti-dollar, so when the dollar moves up, gold and silver will move down. So I know gold and silver have kind of been moving back into for silver in the mid 40s, but look at this, we've had our end of trend warning signal here, the move back up, testing this cyclical high at end of trend, amateur bars moving up all the way, bearish divergence kind of there, and we've had this was our exhaustion buying into 50, and we had this huge sell-off. Gold, similar type activities, like we've been 1900, testing 1900, amateur up bar, bearish divergence after all these kind of exhaustion buying patterns here. So almost like a double top at 1900, and a little bit of a rush for the doors here with the professionals kind of selling off. If gold and silver are weakening, that means dollar is strengthening. Not that it's driven that way around. It's like the move into the dollar is driving the weakness, potential weakness in gold and silver. And I know everybody's talking about, 1900 was breached again. We kind of new highs and so on, but that was a little bit of a rush for the doors by the professionals. The only chart that doesn't kind of go into this scenario of kind of equities continuing down and risk off play and so on is crude. And I kind of mentioned this in passing in the commentary, the written note to the video on Friday, just saying, what if we have a flush signal on crude? So, okay, Friday's activity was low volume stuff, but just because of Labor Day, and that kind of showed up with an amateur kind of down bar on crude. But we went up on crude today, and that's not right. It's like this should have kind of continued down. I know we've had exhaustion buying in crude, put in our cyclical turn. We've got this resistance level here. If crude if we take out 90 on the way up, it's like we're into an uptrend on crude, and you'd have thought the risk on trade was kind of back on. So it's the one chart that kind of stands out. It's kind of not looking right. Let's see. I mean, the highs and lows of these bars is kind of critical. If that was just an opportunity to, because the professionals might have been away from their desks on Friday, an opportunity for that move up, for them to kind of game it up in order to get short, then cracking the lows of that bar. So back down to 93s, I beg your pardon, 83s, and down below 83 would signal that the kind of risk off moves kind of on. Anyway, don't want to make this video too long. As I said, heading for the airport within the next kind of 24 hours. I'll be looking at the markets overnight, not trading at the moment, but just have a feeling it's going to be kind of a cracking week, and I'm going to miss it. Anyway, enjoy your trading.